Good morning from the Protos newsroom. The date today is Monday the 15th of February, and you're listening to the Protos Daily. These are the main headlines this morning. Wall Street giant Morgan Stanley is weighing up a move that would see it become the latest big name to bet on Bitcoin. The UK's finance watchdog says it's struggling to keep up with the number of reported crypto crimes as investor interest continues to soar. And according to Glassnode, Ethereum 2.0 is now secured by more than 3 million Ether, or around $5.5 billion. At the current time of publication, Bitcoin is trading at $47,600, down 3.5% for the past 24 hours. The rest of the top 20 cryptocurrencies by market cap have seen a major pullback, with EOS and Bitcoin Satoshi Vision being the worst performers for the day, down 11 and 10% respectively. Another major hedge fund, Morgan Stanley's Counterpoint Global, is reportedly toying with the idea of betting on Bitcoin. Any such move would see Counterpoint join a raft of funds and big businesses whose recent interest has seen Bitcoin continue to smash multiple all-time highs to hit just under $50,000. The $150 billion investment outfit is a top performer, with 5 of its nearly 20 funds returning more than 100% gains over the last year. But analysts at Morgan Stanley say that although Bitcoin has the capacity to take on the dollar, investor activity has it acting as a store of value over a currency. The bank holds a nearly 11% stake in the Bitcoin-laden MicroStrategy, so this move wouldn't exactly count as popping its crypto cherry. However, before making a more meaningful move on the leading cryptocurrency, the Counterpoint Global Investments unit would first need to seek approval from the firm and regulators. The UK's Financial Conduct Authority says it's struggling to keep up with the sheer number of crypto cons being carried out amid a flurry of mis-selling cases. As investor interest continues to soar, unsuspecting rookie buyers are leaving themselves wide open to a range of scams, including fake exchanges and tokens that don't exist. The FCA says it's so far opened up 52 investigations into potentially dodgy crypto dealers, but has admitted that this is just the tip of the iceberg, as a lack of resources means that many more cases are left unexamined. An influx of crypto-related calls to its consumer helpline shows the scale of the problem, with more than 300 placed in October 2020 alone. But, despite the internet being awash with such scams, research shows that decentralized finance is continuing its move into the mainstream, with 22% of investors in 2020 aged 55 or older, up from 7% in the previous year. This seems to suggest that retail investment in crypto is no longer limited to young people looking to have a little flutter, and that older people are starting to see it as part of their long-term savings plan. Unfortunately, as you'd expect, this also leads to more Bitcoin nest eggs falling into the hands of unscrupulous scammers. According to Glassnode, Ethereum 2.0 is now secured by more than 3 million Ether, or around $5.5 billion at current prices. This figure also accounts for well over 2% of Ethereum's total supply. As you'll know, Ethereum 2.0 is the long-awaited next iteration of Ethereum's blockchain, which, once rolled out, will represent a major upgrade in a number of key areas, including price, speed, and overall usability. The shift from a proof-of-work network to proof-of-stake began in December last year, with the launch of Beacon Chain, and saw the deposit contract hit more than 1 million Ether within a week. Business has been booming for Ethereum in the first few months of 2021, with prices up nearly 150%. a surge in on-chain network activity, and a new all-time high of $1,870 hit just a few days ago. And as if all that wasn't enough, last week the CME Group launched Ethereum futures contracts, reporting the trading of 388 Ethereum contracts, with a total trading volume of $33.6 million on its first day. Exciting times for the space's number 2 player. DeFi projects Cream and Alpha Finance Lab have both had a weekend they'd probably like to forget, after being targeted in one of the biggest flash loan attacks ever recorded. Hackers apparently exploited a loophole in Cream's Iron Bank and Alpha's Homura V2 product, making off with around $37.5 million. The attack involved 9 transactions between Homura Bank V2 and Iron Bank, and according to a post-mortem report published by Alpha, whoever was responsible seemingly possessed at least some insider knowledge. Alpha was also quick to point out that the attack did not affect any user funds, but the loophole has now been patched, and a wider investigation involving Alpha, Cream and Yearn Finance developer Andre Cronje is underway to beef up security and identify the attacker. Thank you all for listening. To stay up to date with the latest from the world of crypto, make sure you subscribe to the Protos Daily on Spotify, Apple Podcasts, and all other major podcast providers.